So, Larry, this was quite a week in the markets. You saw equity markets really selling up rather substantially. It's got a lot of people nervous. Is that going to help or hurt the Fed's effort to address inflation?
I think it's part of the Fed's efforts to address inflation. The way monetary policy works is by raising the costs of capital and discouraging investment. The way it works is by reducing wealth, which reduces spending. This is part of the process. This is a feature, not a bug, associated with the tightening of monetary policy that we've had. And the reason I've been reasonably confident that the economy will slow down, but not so confident about just where interest rates will go, is because of the uncertainty about what economists call the transmission mechanism, how large a decline in markets, how much of a discouragement of housing you get as rates go up.
Well, to that very point, what is the risk from where you see it right now of the Fed essentially getting cold feet as we see the markets really come off substantially, S&P now really in bear market territory? What's the risk that they'll let up too soon on the interest rate hikes?
Look, there are two risks in a situation like this, that we overshoot the runway and that we land the plane too hard. And those are both very real risks in this situation. It's a very, very difficult landing that the Fed's attempted. As I've said on your show before, David, there's never been a moment when we had unemployment below 4 and inflation above 4 when we avoided having a recession within the next 2 years. And that just goes to show the huge difficulty of the task that is before the Fed. And my own judgment is that it's distinctly more likely than not, probably 2 and 3 or 3 and 4, that we will have a recession that will start sometime within the next 2 years.
When we look at the markets right now, a lot of this reaction we think is a reaction to the possibility of higher interest rates. Is it possible it's actually bleeding over into the underlying economy itself? Because we also saw some retail sales numbers that concern people from Walmart and from Target this week. Maybe people aren't spending as much money. We also have seen some softening housing numbers. There are various indications. And by the way, a lot of the things that people are buying, they're buying with increased credit card loans. So
I think that the prospect of recession is looking much more real to markets right now than it was a few months ago. You see that in the way in which certain retail stocks have been hammered. You see that in the way some credit spreads have widened. And it's just, you see it in the behavior of the overall market. So I think you still have more room to go. And as I say, I do think we're unlikely to get out of this with sustained expansion.
There are some thoughts there are other ways as well to address the inflation problem. One of the suggestions is increasing corporate taxes. That's something suggested by President Biden. Mr. Bezos of Amazon came out against that. You had a little bit of a disagreement on Twitter this week.
Yeah, look, I've been hardly consistently supportive of everything the White House has said on fiscal policy, and I haven't been consistent with everything they've said on policy towards business either. And I've got great respect for Jeff Bezos as a business leader and as an observer of the economy, but I didn't really see his point. It seemed to me that it was pretty natural to raise corporate taxes so as to reduce spending when you had an economy that was overheating. And it seemed to me pretty reasonable strategy to try to raise taxes to reduce spending in ways that would affect the most fortunate people in the society. And it seems to me that that's what President Biden is trying to do, and that's what he pointed up in his remarks. So I didn't understand why Jeff Bezos was suggesting that they were somehow an obfuscation or somehow an inappropriate kind of commentary. You can agree or disagree with the president's policy, but I found Bezos's comments to be somewhat off base.
Another way that President Biden is suggesting we might address some of the inflation problem is by more vigorous enforcement of antitrust laws. We had the Assistant Attorney General for Antitrust this week come out and say he thinks he's got some problems with private equity. What do you make of the efforts at the FTC and the Department of Justice on antitrust front?
I'm very worried about whether they are in the right direction. I don't think there's any question that we need to step up antitrust enforcement in America. I don't think there's any question that there are areas where we have too much monopoly power that should be prosecuted, principally where individual firms are merging to get excessive market shares in particular industries. And the budgets of those agencies have been allowed to erode in ways that are quite damaging. What I think is badly misguided and potentially dangerous to our economic future is the set of doctrines that people jokingly refer to as hipster antitrust, or the new Brandeisians after Justice Brandeis. That's a theory that says antitrust shouldn't be about maximizing benefits to consumers, but should be about some other different set of abstract objectives. And I think that tilts very easily into a kind of dangerous populism. If the head of the antitrust division thinks that there are mergers that are headed towards monopoly, he should try to block those mergers. If the head of the antitrust division believes that there are companies that are engaged in inappropriate exclusionary business practices, he should prosecute those companies. But I don't understand what his argument is that whether a firm is owned by public shareholders or private equity shareholders should be dispositive. If he's saying that all the private equity firms are colluding on particular deals, I understand that argument. And if he can prove that argument, it would obviously be a serious problem. Right. But it frankly sounded rather like some of the populist rhetoric that the FTC commissioner, Lina Khan, has engaged in. Right. And I think it's very important that we have antitrust policy based on facts, based on economic science, based on consumers, not on a kind of generalized feeling of hostility and outrage towards business. And I'm frankly worried about that.
Okay, Larry, one quick one here at the end. There was a big objection from the shareholders to Jamie Dimon's compensation. There was a $50 million bonus that they were going to pay him that they really objected to. What did you think of that?
Look, I think taxes ought to be more progressive. And so Jamie Dimon and everyone else who makes a lot of money ought to be paying more in taxes. It ought to be much harder for them to pass large fortunes to their kids. But God, if you look at what Jamie Dimon has contributed to the market value of the share owners of J.P. Morgan, I don't think there's anything unreasonable about his being paid and making as much money in a year as a really great pro golfer. And so I was surprised at those objections. I think the way to get at issues of inequity is to have more progressive taxation, more burdensome taxation on estates, get rid of a whole set of loopholes, but driving people out of leading public companies into the private sphere, away from public companies. I don't think that's smart strategy for our country.